I'm only doing it's really late at night, so I'm only doing a account review right now. So, but I kind of mentioned I was gonna do a video tonight, so I'm doing it. I am definitely sitting at the lowest point of the year. I was down another like $1,000 or so, or $2,000 during the day, and I just wanna update because it's a momentous day. Every time I hit a new low or a new high, I want to make sure I record that, get that in the books. So I'm gonna show you the account, everything that's going on with it, and then maybe I'll briefly talk about it. I'm not gonna do a thoughts video today. So here's the account. I was down. Oh, actually, a little bit of after hours action equalizing things, but I was down as much as 132,623. I haven't been that figure since like 2020. It's a really big fall. These are all the options positions. I'm going to scroll through them really quickly. You can pause the video at any moment to try to figure out the exact position. All the information is going to be right here. Everything that you might need to know about the position in the little box. It's highlighted. These are the equity positions. Apple is actually up slightly today. Realty income down about the same percent as Apple is up 0.5%. Main Street Capital is up a little bit after hours apparently. That's probably going to correct tomorrow. Paramount Global up almost 0.5%, and of course Smith and Wesson down another 0.5%. Now the major moves that I've done is I've discussed on the previous video that I made a mistake by buying puts for protection rather than just reducing my SWBI position. So I've reversed what I did. It cost me about $50, the mistake. So I decided to lessen my position by 500 shares, so now I have only 8,000. And then here's the dividend, though. I made sure that I did it after the cutoff point, after the ex-dividend date, which is the date at which they issue the dividend. So I am going to get that $50 in dividend. So in a way, it's almost like correcting the mistake of buying puts instead of reducing the position. So I'm about net neutral on that mistake, if you want to look at it that way. So anyways, I'm going to be getting $850 in dividend January 3rd, which is going to be lessening the blow by a little bit, but not really, because it's $37,000, man. That's a lot of money. Like, what's $800 going to do? POS, you know what I mean? All right. Having said that, because I've sold some position, I have a buying power at 46,800 now, which is a bit skewed because of the money I have borrowed. If we go to the investing tab, I have borrowed a total of $110,000 now. It was 113 not too long ago. So I'm trying to reduce it, and not because I want to, but because I have to. I got a margin call warning not too long ago, about a week ago, and it said that I'm nearing my margin maintenance, and if I don't reduce my position, they will issue a margin call. Now, even if they issue a margin call, I still have some time to maneuver and stuff like that, but I mean, it should tell me that I'm cutting a little bit too close. Now, my margin maintenance level actually has reduced quite a bit since the put options expired on realty income. So I'm not really in danger of getting a margin call. Never really was, but I don't like receiving those messages. Going back into the account, you can see visually how big of a proportion of the market value of the account the debt actually is in yellow here versus my equity, which is now only 135. This number used to be like 220. So I'm almost down $90,000. Wait, is that right? 85,000. I don't know. I used to be good at math. 85,000. So I'm down $85,000, almost 90. And that's not good. It's not good, but that's such is the life of the leveraged investor. It's a bit worrisome. Maybe I'll talk about it in a second. So total return 8,000 by Apple, still in the green. Realty income still in the green. Mainstream Capital down red, but still in the green, factoring in the dividends. Total equity, Apple is now the largest position again. Smith and Wesson's only 66,800 after being $103,000. It's rough. Main Street Capital 35,000, Realty Income 27,900 or so, 20, call it 28. Paramount Global 20K, that used to be $34,000. Wow. big losses. Big losses. Here's the margin maintenance level. It was 90K. Before that, it was 133K. So I would have to drop below $86,000 to get a margin maintenance, to get a margin call. Which is weird because I've used $110,000 worth of margin, and you're supposed to only be able to double your investments. But the way that it's calculated, it takes your purchase price into account when they try to determine your margin maintenance level. So it's not as clear cut as one might imagine. So that is the account more or less. Oh, performances. This is the 1 day performance. I was actually in the green for a while. This is the 1 week. It's down 13%. It's pretty brutal week. 20 grand is a lot. 1 month performance down 23.07. Talk about a lot of money. That's 40 grand. 3 months is 18.29%. Year to date, I'm now down 50 grand and $500, or 27.15%. I'm getting demolished relative to the market. It doesn't help that Apple has been doing badly relative to the market. And Smith and Wesson has just been getting demolished, and so has Paramount. All of my positions besides Main Street and Realty Income have been just completely decimated, destroyed, trampled on, and left for dead. 1 year performance, negative 25.34. And all-time performance, I'm still in the green somehow, right? Started taking this account seriously on 28th of September, I think, or August 28, 2018 is when I made the first video here, and I put some money into the account. That's why the line looks so flat beforehand, is because there wasn't any money in it. There was like a couple $1,000s, maybe a few $100. So I put 30 grand there in the account, and I've been adding a little bit of money. Although I think I should probably reduce some of that money. At the peak here, I was up almost 200%, which is crazy. Now up only 87.7% all time, which is about 4 years or so, 4.5 years. I think it's still better than the market though. 87.7%. The S&P 500 is on the 5-year chart 42.51. So still doubling the market performance over the last 4 or 5 years. But I mean, if you look at the recent performance, it doesn't really look like that at all. But there was another point in history where it didn't look like that, when I started laying in the put option. I'll start selling the put options really early here in the March crash, March 2nd, 2020, when things are starting to crash. And it took a really big beating with the sharp sell-off all the way down into red territory. And then it rebounded after that, after I switched to, some more risky kind of contingency policies that I had implemented for myself. And it worked. I resumed my account, actually almost doubled before I went back to normal. And ever since, I've been grinding a little bit higher. And then since August 8th, 2022, I've been getting just my head cut off. So that's the history of the account. That is the comparative, relative comparison to the S&P 500. Those are all my positions. I'm logging this in. Feelings. I think I'll get through it. I'm pretty confident I'll get through it. I think it's just gonna hurt a lot. I think that perhaps, by the way, keep in mind that I've been wrong about a lot of stuff when it comes to these thoughts and predictions. Okay, so I'm just throwing it out there just to record like what I'm thinking. You can tell me what you're thinking about all this stuff. But I'm thinking like nothing really much is gonna happen next year or the following year. I think as the elections come in on 2024, things might start getting exciting again, because there might be some change in policies, some change in MO. But I do think 2023 is going to be quite a bit better than this year, because the year-over-year numbers on inflation are gonna start to look a lot better. And even though the Federal Reserve might not want to stop raising or cut rates, the inflation numbers are going to be low, and that's going to act as a little bit of a buoy. Okay, it's going to be buoyous to on the markets. So I think that's what's going to be happening here. But I think with that said, the review of this account for today has been done. I am going to be traveling this weekend, so I might not do a video for a while. If I do, it may be just like me and the camera walking around, Northern California somewhere, and that'll be it. Maybe I'll do some shorts or something like that for fun. All right. Let me know how you're doing and what you think about my thoughts of the market in general, and kind of like the financial atmosphere about next year and the following one, and what are some unique thoughts that you might have about the market. Peace out.